does take us to our talk of the tape. Where is this record-setting rally heading from here? Let's welcome in Dan Greenhouse of Solus Alternative Asset Management and JPMorgan's Elyse Ausenbaugh. It's great to have you both with us. Elyse, when you look at this market, the word many come back with is resilient. Is that how you feel?
We have been using the word resilient. We think that 2025 is going to be a year that investors have the chance to build on strength. We see more room for this market rally to run. We're expecting another kind of high single-digit total return upside from here, and we're really focused on key themes and sort of alpha opportunities at the sector level.
Kind of continuing, Dan, to climb this wall of worry. At least Bank of America talks that way, that there are all these bullish technical patterns. I think the general theme is bullish, but there is, in their words, a lot of non-believers out there. Why so?
I mean, there's been a lot of non-believers for several years now. I don't think that any arguments that are being advanced today are novel or new in any meaningful way. They're the same arguments that we've heard for the better part of, call it, 2.5, maybe even 3 years now, about valuation, about concentration, about rates, about the Fed. Obviously, now you've got, as you were discussing today with Weiss, issues around the administration. There's always seems to have been something to have worried about over these last few years, and virtually all of them have proven not to come to pass. The market is, as we know, at basically at a high. The equal weight index, not at a high, but pretty close. So I don't think participation is as broad as you would like, but there are a lot of stocks that are doing pretty well.
Well, I mean, if you look at the sector performance year to date, it is pretty broad. We have had the broadening, and maybe the one thing that we had worried about in the past that we haven't had to worry about now, earnings. Mm-hmm. Earnings have been pretty good. The market wouldn't be where it is without that because it's offset some of the noise and the concerns out of D.C.
Exactly. And I think that's where we're really expecting to see the thrust of the broadening out trade really play out. I mean, you consider a sector like financials. It's one of our high conviction ones. It was leading the pack in terms of the fourth quarter earnings reporting season. And we are expecting positive results from all 11 sectors by the time 2025 is said and done.
Financials continue to get big flows. If you're talking about a broadening market, does that continue? Even on that surprising news yesterday that we got out of D.C. that the Biden era M&A rules are going to stay in place, at least for now, which was a surprise to many.
I will say, you and I have discussed, you won't remember because I'm not on repeating it enough, but one of my things that I thought the market was getting wrong was this idea that there was going to be this total relaxation of the M&A rules, and everyone will famously remember that J.D. Vance said the only person in the Biden administration that he had any affinity for at all was Lina Khan.
Yeah, well, when she's not there anymore, so people thought, okay, Lina Khan's gone. It's going to be easier to make deals. People were using animal spirits to talk about the expectations,
especially in the financials.
Yeah,
that's right. My point was just I wasn't so sure that was the case. Now, mind you, the continuation of the merger rules doesn't mean that they're going to be as onerous, perhaps, as the previous administration. It just means, from a continuity standpoint, they wanted to keep them there. How they interpret those rules is really the question, but that's a story for another day. As it relates to the financials, listen, I've highlighted the asset managers like Ares and Blue Owl and KKR for a while. KKR had relatively speaking, a disappointing earnings report, but on balance, the financials have done very well. The banks are doing very well. There is an M&A hope in there, but you look at the charts of Goldman Sachs, you look at the chart of Wells Fargo, obviously JPMorgan. There is a lot to like about that space, both fundamentally and technically.
Elyse, you're not looking for a great year, though, in terms of returns, right? Only about 5% from here, maybe even less than that. Why?
Look, I think we have to kind of manage expectations, and we are accepting that this is a market trading at a lofty valuation. We're expecting to see that valuation come down, and earnings really have to do the heavy lifting. But then we're expecting another year of earnings in 2026 on top of that. So we think the rally has legs, but a big part of the conversation we're having with our clients is focusing on ways that you can not only lean into these opportunities, but renew portfolio resilience to protect those gains that you have made over the past couple of years.